Hello guys, hello everyone, and we are starting the streaming session, so give me just a sec. Alright, so the stream time, so that will be my bell. I will be starting my streaming sessions with that, like the market is opening. Alright guys, so I welcome you everyone here at today's session. I'm Stan, I am Senior Trading Specialist at Exness and also a trader since 2004, and I will share with you some insights, ideas, maybe trading opportunities, let's say, not signals, not ideas exactly, but opportunities, which I will share with you in this streaming session. I will need to make a disclaimer that everything that you will hear at this session is intended for educational purposes only. By no means it can be served as an investment or trading advice. Always have your own head in the game. Regardless of whatever everyone says or anyone in the internet says. All right, so yeah, I guess let's start. And I will read chat. We have chat here, so for those of you guys who are entering here on YouTube, you can put comments here in YouTube. So I'll appreciate if you leave some comment and will tell us where you're from, which country, which city are you watching the streaming sessions from, and also don't forget to send the link to the streaming session to your fellow traders. Don't leave it just for yourself, because we believe that that might be helpful and valuable for those traders who are pursuing the goal of becoming a trader. All right, so today we will talk about the Fed's week. So this week is a Fed's week, meaning that Federal Reserve will post an interest rate publication. I mean, it will publish the interest rate and make a decision on the interest rate. More importantly, it will be the press conference of Jerome Powell, the Fed's governor. He always holds speeches 30 minutes after the publication. I'm sure, guys, you've heard a lot of those videos on TikTok and YouTube. Good afternoon and market crashes, right? Hopefully that will not happen this time, but we are traders. We don't care actually where the market will go, so we work with volatility, we work with opportunities that market provides, whether it's long or short, so it really doesn't matter. So long story short, the interest rate decision as well as press conference is opportunity, because it's volatility. Where volatility occurs, where their opportunity pops up. Not necessarily opportunity will be huge, so sometimes it's just nothing, so market just stands and does nothing at all. But whenever we have important news publications, we need to know a couple of things. First of all, don't expect big market moves ahead of Wednesday, so ahead of tomorrow, ahead of this publication. In other words, so markets may move at all. So for example, we had the movement on gold yesterday and today, on Euro USD, but moves are pretty much trimmed, so they are not very long term, so they are not elongated, so they are pretty much short term in nature, so volume is trimmed and it's wrapping up very quickly. Big money stays out of the game usually ahead of big publications, ahead of important publications. Why is that? Because they need to have some certainty. Well, of course, there is no certainty in the market even after Jerome Powell's speech. But still, they wait until he says something, because if he says something really unexpected, for example, he drops the interest rate unexpectedly, of course, that might affect the market very much. So big money stays out of the game, sit on the sidelines, waiting until the press conference, and if nothing surprising happens, so they make a bet. They can get positions to the market. All right, so let's read chat a little bit. Joyce here. Hello, Joyce. Nairobi, Kenya. So nice to see you here. H.A. Nabil, or Nabil, watching from Dhaka, Bangladesh. Hello, Bangladesh. Yes. All right. Now let's go straight to charts maybe, and enough of talking. So let's go straight to charts. And yeah, here it is. So you see Exness terminal right here on your screens, hopefully. So that's the, by the way, that's BTC, but we don't need BTC. Let's watch DXY in the first place, which is the American dollar index. So we are starting with the American dollar index as the classical major benchmark for all assets, because all assets are quoted against the US dollar. I'm sure you guys are not trading anything against South African rand or, I don't know, euro or gold. So obviously you trade instruments against the US dollar. So give me just a sec. My internet connection might be lagging a little bit, so it's live streaming session that happens from time to time. All right, while it's loading, so let's quickly go through the calendar. So today is May 6th, 2025. And as I've said, this is a Fed's week. So if we scroll it down today, that's Tuesday. If we scroll down today, Wednesday. So you see Wednesday tomorrow. First of all, for those trading crude oil, so there is a petroleum status report and crude oil stocks change published by the Energy Administration of the United States on Wednesday. Some volatility might be expected on crude. By the way, we'll get back to crude oil later, but let's just not forget that Wednesday is a publication of the crude oil. In my time zone, it's 3:30 p.m. It's GMT plus 2. In your time zone, I don't know which time it would be, so do the math yourself. But if you trade crude oil, that might be interesting. But you see that this publication is right ahead of Fed interest rate decision, which is going to be published later, as well as the press conference. So press conference is followed by 30 minutes by the interest rate decision itself, and usually Jerome Powell is actually very cautious. So regardless of Donald Trump is usually trying to push him to lower the interest rate. He says the economy is doing fantastic. But Jerome Powell is usually more cautious, so he is calming down. So he says, we don't have enough data. He says that all the time. We don't have enough data. Labor market is strong. It's resilient, so we need to wait until more data comes in to make any decisions, but yet we cannot make any decisions. All right, as you see, so the projection for this interest rate is not changing, so it's not going to be changed probably. So if we click it here, we see that the interest rate will probably stay at the same level. So 98%, 99% of traders are sure about that. Again, it's loading. All right. So you see that last week we had pretty tectonic shift in the market. Not only this interest rate is not going to be changed, but actually markets don't expect the interest rate to move down in summer. So they expect it to, it's 2024. It's March, so they expect the first interest rate drop to happen in July, not in June, because if we go to the FedWatch tools, to the CME's FedWatch tool, and let me show you one picture which is worth 1,000 words. All right, the CME's FedWatch tool is loading too. While it's loading, I will read some chat comments from you guys. So yeah, thanks for joining us. Gold, US 30, Bitcoin, Australian dollar. So you're trading these instruments. That's fine. Watching from what's that, Cuba or Juba? This is the city, right? So I don't know the name of the city. Sorry. All right. So CME's FedWatch tool. So it measures probabilities of interest rate change. If we go to historical, if we click to historical, so we can see that for June, for example, so for May it's pretty much clear, but for June, so on Friday we had pretty tectonic change here. You see these lines going up. This is not just a regular situation, so the probability of interest rate capped at the same level in June was at the 34% level, 34.5% level. Now it's at 72% level. So traders are discounting that interest rate will not change in June, okay? So maybe it will change in July. Let's take a look. In July, that might actually change, and we see that the probability of interest rate moving one step down is 56%. Probably it will change in July, that's right. What does that mean practically for us as a trader? So first of all, that should provide some support for the American dollar in theory. But American dollar is substantially under pressure. So it reacted it actually showed no reaction. So what I want to show you here, for example, go into DXY, the American dollar index, previous week, it showed not only no reaction, but it showed the negative reaction. So it showed some profit taking. So here it is. So it displays very negative sentiment for the US dollar. As a result, as a result of the strong jobs data, what happened actually? So short-term bonds, they fold. So the price, they fell. The price of short-term bonds of the United States, they fell, and the yields have grown. That's it. So nothing else happened. By the way, 30-year bonds, they already have 4.8% yield, which is pretty high. So it has no room to grow, and they didn't react at all. So market showed no reaction on the strong jobs data and as probabilities change for the interest rate. Moreover, market was showing the negative reaction, so selling off the American dollar. That displays a negative sentiment for the US dollar, guys, and that might display some weakness of the American dollar in the near future. So we can assume that whatever Jay Powell says, probably American dollar can get under pressure. So that is the notion of a negative sentiment. Negative sentiment is when the market ignores the good data or ignores the strong data. That's exactly what happens. Now let's take a look at the daily structure of the DXY. So just let's start with that. Daily structure of this market points that we are still in an uptrend. In an intermediate correctional uptrend. Still in a downtrend, in a long-term downtrend, of course, if you see what I mean. So market is declining, correctional uptrend. So we have today's Tuesday, so this day is not counting. So actually 2 days down. Still we are yet still in the upside swing. So it had started here in April 22nd. Day number 1, 2, 3, 4, 5, 6, 7, 8, 9 days swing and 2 days of the correctional move. So currently American dollar is yet supported. So reaction on the strong jobs data was negative, but I would say it's rather profit taking. So it's rather no reaction. We can say that this is no reaction. I don't see any directional bias here. Well, I can assume that the market can sell off. The US dollar can sell off a little bit after Jay Powell's speech and after publication of the interest rate, just because of the sentiment, because sentiment is pretty weak, and the position of the price of DXY, the position of the quote of this market is actually inside of what we call the value area, the distance between 20 and 50-day moving averages. So with that, we can logically assume that it might slide down a little bit, not substantially maybe, but it may slide down and continue moving in the sideways range. So that would be the most logical development here. Well, if we also put here Bollinger Bands indicator, you see that it's getting narrow, and it's kind of, so volatility is pretty low here. So it's getting lower and lower and lower. Maybe it will get to the lower band of the Bollinger. So that would be the most logical development here, 98. And so if we put here average true range indicator, which is the volatility indicator, so volatility was peaking, but it's moving down. Peaking volatility, so high volatility, means probably the stopping market, and the market is able to stop or is ready to stop or start to consolidate, because when the volatility jumps immediately, so it starts consolidating, going back and forth inside of the range. So that's exactly what it happens when the volatility jumps. So the same, by the way, is happening with gold. All right, so what does that mean practically? What can we do with this information, for example? So yeah, we can build modest expectations of Euro USD going up, for example. Maybe not immediately, maybe after some kind of a pullback or correction. Maybe not immediately. It doesn't look like it's being supported yet. Maybe it will be very temporary reaction. I don't know, with further downside reaction, something like that. So I don't expect any significant reaction to be happening here. And when the market is sideways, when it's range bound, so it's better to use some range bound indicators like envelopes or Bollinger Bands. So we're staying closer to the lower band of the Bollinger, and maybe it will get even closer to the price. So that might get some shift to the upside. But I don't believe in the big development here, because Euro USD for the long time is consolidating already, all right? Already consolidating for pretty long time after the peak. 1 to 3, a lot of days, so we can just count the number of days. The date range, you see 13 bars, 15 days, all right? 15 days it's consolidating below the peak, so that's pretty much already weakening structure. And when the structure is weakening, so the probability of the market to sustain the upside movement is diminishing. So what we can assume that the market might actually move down after testing the higher area. It might go down, retest lower levels, and retrace back again, something like that. So if you want to do something with Euro USD, so probably the best course of action would be to buy it, because I mean this week, maybe today, tomorrow, something like that. Tomorrow is pretty dangerous because it's Fed's publication. Market's going to be unpredictable, pretty unstable, because you know when the market news are coming in, so volatility changes and the market starts making wicks to both directions. It's not good to maybe to hold your positions over the news. So, but ahead of the news, so that might be small window of opportunity of market going up a little bit. So because sentiment for American dollar is actually bearish today. So what can we do in this situation? You can play the momentum trade, for example. I'm not sure that it's the best trade that you can make, because the momentum trade means that you should buy at the peak, place pretty distant stop loss, otherwise you might be whipsawed very quickly and get out pretty quickly. So the profit loss ratio is not representing asymmetrical trading opportunity here. It might be like 2 to 1 profit loss ratio maximum, or maybe 3 to 1. You will be very lucky if you will get 3 to 1, I guess, but I don't think it will be much more than that. But after that, actually, that might be the short opportunity, which might be substantially more interesting. If the market jumps above the Bollinger, so if it forms, if it goes away, if it jumps above the local peak of 1450, so we might already think of maybe putting some short position. So that might be substantially more interesting in terms of risk-reward ratio, because the downside potential might be greater than your risk in this particular situation. I know that's scary to go against the trend, because in this situation you're supposed to buy the American dollar, to buy the US dollar, right? But you're thinking, okay, it's weak, why should I buy that? Well, the reason is very simple, because American dollar fundamentally is not weakening. So we've seen probabilities of interest rate actually shifting to the more hawkish scenario. We've seen yields of government bonds are keeping stable at the peaks, 4.8%, 30-year bonds of the United States. So that basically creates the tight situation for the US dollar. It should not weaken substantially. Otherwise, well, it might weaken politically if Donald Trump says something, the US president. But from a structural standpoint, probably it's not going to weaken a lot. So I will refer to the situation as the short-term long opportunity and the medium-term short opportunity. Medium-term is not also long-term. It might be within this week, maybe a couple of days, 2 to 3 days, something like that. All right, gold. Well, guys, should disappoint you. Gold probably. The gold rally might be over despite its strength. Why am I thinking that the gold rally is over? I mean, I don't expect the gold rally to... Well, it might actually outpace the high. Yes, it might do that. But I don't think it will sustain the move. So, yeah, it absolutely might do that. I mean that, for example, it can go higher, retest the peak, then going back lower. I don't expect the big moves like we've seen previously on gold because of several factors. Here's why. Okay, so the first factor is that if we put here average true range indicator, we've seen that cyclically, let me put another color to help you visualize it better, guys. Cyclically, the volatility had reached the peak, the new peak. So that's a new cycle, basically, of volatility, meaning that it had reached the peak. So whenever it reaches the peak, what happens here? So it tends to lock in a consolidation, it tends to stop. So it happens every time. Just take a look at what's going on here. So the market is overheated, so market locks in a trading range, which might not necessarily be very small. It might be actually pretty sustainable, but it locks in a trading range. Here was the trend, but there was not a new peak for volatility. So for example, market jumps to the new peak on volatility, again consolidates. New peak on volatility, again consolidation. New peak on volatility, again consolidation. So a lot of times then when the volatility cycle ends, what happens? Market starts to consolidate. So moves are unsustainable, so they cannot be driven higher substantially because big market participants start to unload their positions, which we don't see yet, but they might start to unload their positions at the peaks because they see that the cycle is probably over. Another observation, guys, is that gold had reached the seasonal cycle, the end of the seasonal cycle. Seasonal cycle ends at the end of April, at the beginning of May, actually. So that's the end of the seasonal cycle. What does that mean? That does not mean the decline. So probably it might turn into sideways action or consolidation. So from the 25-year seasonal studies, we know that a lot of months, for example, between May and July, gold tends to stay in a consolidation. Gold doesn't usually grow within a period of between May and July. So the next cycle starts in July. That's July, that's the next cycle. I don't know exactly how far it will go, so don't treat it as a forecast. But usually that's the next growing cycle. That would be logical, right? So volatility might diminish, so show the new bottom, market may consolidate, and then it might continue going higher, and then the volatility will continue going higher too. So that's very logical model. Okay, so now we are at the peak of the model, at the peak of the seasonal cycle, at the peak of the volatility cycle. So with that, of course, if you buy gold, so you might be amazed by how quickly it goes, but you might be frustrated when you see the big sell-offs following this solid price action. You might say, okay, what the heck is going on? Why it's falling, for example? And all of a sudden, so you forget that it's the end of the volatility cycle and the seasonal cycle. That might happen like that. For example, it moves solidly to the upside. You enjoy some profits. You jump at the peak, like many traders like to do. And then, for example, Jay Powell comes and says something on the press conference, and you have immediate liquidation, immediate sell-off, something like that, right? Something like that might happen for those of you holding positions. That might be dangerous. So you might think, okay, so what should I do in this situation? Should I have a trailing stop if I have a buying position? Should I close my position? What should I do in this case? So if you already have the positions, the best course of action, I think the wise thing to do would be to at least partially take some of your profit out of the table if you're already in position. If you are not in position, so be very careful holding the position, because you are starting to hold position in a pretty unstable situation, right? It might continue going up, then there might be bullish trap, might be moving down quickly, something like that. So that pattern might appear when volatility cycle and the seasonal cycle is over. So yeah, by the way, all right, so what to do is, should we not trade gold? Well, not at all, absolutely not. So what I am just telling you is that we need to be careful, and we need to stick maybe to some situations when we can spot the opportunity at the potential top of the move. That's difficult to trade gold. That's difficult. To sell gold psychologically. That's difficult from the volatility standpoint. So you might be stopped out very easily. So don't short it right now. So I would not short it. Well, you do whatever you want, right? But I would not short it right now. So what might be the best course of action here? For example, it goes higher, and it expands above the 2 standard deviations line, which is the upper line of the Bollinger. Then what happens next? For example, it moves down, and then it forms some candlestick formation or any other confirmation that shows you that the rally is over, something like that. If you see something like that, for example, engulfing pattern or whatever other candlestick pattern that you might get, so you might potentially get into the trade and get a pretty quick profit here on the retracement, on the reversal. So that's a mean reversal situation. Will that happen? We don't know the future. I don't have a crystal ball, guys, just as you, but I just know how markets typically behave at the moments when the cycle is over and the last market participants are entering in the market. Guess what they provide to the market? They provide liquidity, they provide buying pressure, and sellers are doing what? Guess what sellers are doing? Big sellers are doing. They're unloading their positions. When these guys are buying, they're selling, selling, and selling. Just, like on the exchange, those gestures, sell, sell, sell. Okay, so they do just like that. And the market is actually dropping. Another logic, by the way, another logical point, which is related to gold, is the commitment of traders reports. That's visible on the barchart.com website. So that's the website which aggregates the situation about the American futures. And if you go to futures tab, commitment of traders, but sometimes it shows a lot of ads, so don't pay much attention to that. It advertises constantly some mobile offers to me. All right, but whatever. So what we wanna see here, we go to gold. And here it is. So the red line is solid, so it's going up. So that's the position of commercial traders, the net position. Net position meaning that they have longs, they have shorts. Commercial traders are those who are usually using delivery. So they're going into the delivery. So they do not speculate just for speculation. So they use delivery, real gold bars, and they purchase it for storage, for investment purposes, for whatever other purposes. And they have been buying a lot, so that's interesting. That's a bullish signal, right? So many traders will say, "Oh, that's a bullish signal, a strong bullish signal stand." But at the same time, look what's happening with the price. Usually, accumulation from this group, these big market participants, they accumulate the position on the. So when the market is bottoming, when the market is moving down, so that's the most exact or most common behavioral pattern which is associated with these guys, with commercial traders. When the market is declining, they accumulate more positions. Then whenever their position picks, price reverses. Now we have the simultaneous movement of gold and the simultaneous movement of commercial traders' position. That's not logical. Something needs to correct, and I think that the price will correct here, not their position. So they will probably not purchase less, they will purchase more, but buy on the lower prices. So yeah, that's not logical. So they don't, I mean, these speculators, these guys at the green line, they are not okay with losing money because they are operating in the market. They're speculators. They are not going into physical delivery. They're speculating in the market. If they get losses, then what? They will get out of the game very quickly. So they will get liquidated. They might get margin calls, and so probably they will stop selling. So that's the number one thing. Another thing, that they have sold a massive amount of gold futures already at the peak. So they bet on the declines. They bet on the decline. Maybe so the price will it will need to go in the direction of this green line, at least in a short term. All right. So that's my logic, guys. That's my take on gold. Don't treat this as a exact trading signal or whatever it might be. So be skeptical about that. So if you see the increasing volume or increasing activity for gold, well, don't experience FOMO or fear of missing out, because I know that that's a common emotion among traders. So if they see the big bar after Jerome Powell, for example, after interest rate publication, they will see the big bar like that. Oh, I need to get here because the gold will reach $4,000 in no time. So that might be a trap. Don't fall for that. Don't fall for FOMO. Even if it will continue going up, No matter what happens, don't fall for FOMO. So just sit back, relax, and say to yourself, okay, that's not my opportunity. I don't jump at peaks. I need to buy dips. I don't want to jump at peaks. That's what a good speculator does. Okay, and if the market goes down, you will be rewarded by not doing anything here in this situation. Well, if you want to go short, don't place too tiny stop here, because tiny stop might be easily captured, and you might be stopped out just without saying mama or something. So, and you know, it triggers a lot of emotional response when you get a fast stop loss, a quick stop loss. So you got frustrated very quickly. So some people got triggered by this situation. So you place a position, 1 minute you got stopped out, right? They start fighting the market. What the hell? So I will sell it more, right? They start selling more and more and more at new peaks. Finally, they end up in the big losing day, in the huge losing day, in the red day. Later, they regret the situation. They call themselves lost, I don't know, poor names. Don't fall for this trap, guys. So be intelligent and patient traders. All right, so that's for gold. All right, so US 30, Bitcoin, Australian dollar. So let's go to US 30. So Joyce, you are trading Dow Jones, right, which is US 30. Why not S&Ps? Why not Nasdaq? So they're faster. I mean, especially Nasdaq, which is US tech, it's faster. But all right, so if you insist on US 30, let it be US 30. Well, that's just not common choice for traders. US 30 usually aggregates a certain number of stocks, industrial stocks, which are not fast growing stocks. For example, Nasdaq might be a little bit more interesting. For example, if it retraces, the retracement might be substantial. Nasdaq can easily rise for 3-4% a day on the bear market in the correction, but Dow Jones, nah, probably not, because the amount of stocks which are fast, which are high beta names, so-called, it's pretty low in Dow Jones. So they contain a lot of big corporations, established businesses which pay dividends, on the contrary to Nasdaq, which contains a lot of technological companies which are sensitive to the news, but they're also sensitive to the pullbacks. When the pullback happens, they tend to grow substantially. For example, US tech, right? So that's why for analysis we usually use S&P 500, which is US 50, right? US 500, sorry. We use it for analysis because it combines a certain number of technological stocks, a certain number of industrial stocks and financials, healthcare, whatever it might be. So what I think about the market? Market is, yes, market had trimmed the previous drop, of course. So it's not expanding it, and the volatility is improving. So VIX itself, which is the volatility index, I guess it's pretty much 25, I guess. 25-ish. So let's just quickly take a look. We don't have volatility index here at Exness, so let's go to TradingView and check it out. Yeah, it's 24. 24 is not scary. It's the pretty low value of volatility, and but it's not the bullish market. Sometimes low volatility is associated with the bullish market, but probably that's not this situation, because we're not in the bullish market. We're in the market that awaits information, market that just sits on the sidelines waiting for more information, because we are in an unprecedented situation with tariffs, with changing financial markets, because investors are sitting on the sidelines. Chinese investors, they want to get rid of treasury bonds in favor of European bonds. So this rotation of capital is pretty intense right now. And that's why, so the level of fear had decreased, but it's still not that low. So it's not the bullish market. It's not 14, 15 like it was some time ago on the growth, and volatility can easily come back. So you see this, you see volatility here at the bottom, so it can easily come back. I don't think that it will stay here for the long time. So probably it will come back above 30, 35. So it would be very logical, because market is not stabilizing yet. So there's nothing stabilizing in this market. All right, What else? So, for example, to get the quick idea of what's going on in the market, let's go to CNN Fear and Greed Index. That is published on CNN.com website, which is the big financial portal in the United States, and it's pretty convenient. They have a tool which is called the Fear and Greed Index, and give it just a second. Okay, it's now we're in a greed territory all of a sudden, so we are in a greed zone. And let's make a breakdown of what exactly is good about this market. All right, stock price strength is improving because of the pullback. That's right. But we are still in the fear territory. Market is still down. So breadth is improving. So the number of stocks growing outpaces the number of stocks falling. So that's called breadth, market breadth. So meaning that a lot of sectors are going up, right? A lot of sectors are going up, and that's actually the sign of some healthy attitude coming back to the market. Just let's compare. All right, technological sector. What is that? Going up? Yes, going up. Financial sector going up, going up. Communication going up. Energy is stagnating, so it's not going up yet. All right, real estate is going up. Healthcare is stagnating too, but they are not falling, so probably we don't have yet any one sector which is falling. So the market is feeling pretty well, and that is called the market breadth. Market breadth is improving. What else? Market volatility is neutral. Safe haven demand, so-called, had dropped to the new low, meaning that the demand for junk bonds, for bonds itself, is pretty low. So the sell-off on the bond market was substantial, and the yields of bonds are high, which means that the safe haven demand is pretty weak right now. And the junk bond demand is also pretty low, so it's an extreme greed territory. What does that mean? So market doesn't seem like a failure right now. At the same time, we don't yet have a driving narrative. We did have the combination of bad factors and good factors. Among good factors, of course, that was a strong NFP report, employment report, and unemployment number was actually also pretty strong. But there was a pretty bad GDP, not good. So sentiment indicators are not that good. Consumer confidence is not that good in the United States. So in other words, it's just balancing on the sidelines with combination of good and bad factors. So what would I do in this situation? Would I expect a further growth? I would be very cautious, because with that level of volatility, I mean VIX, right? So you've seen VIX, it's at the bottom. So what about ATR? ATR is bottoming too. It has not yet reached the historical bottom, but it's not at the peak. And that might be the historical, that might be the reversal, the temporary reversal situation. What about, what about RSI, for example, relative strength index? It shows that we are not yet overbought in the overbought territory, so the market has room to go, but you see that basically it cannot, so the momentum is pretty weak. So it's not reaching, the price is going up, but the RSI is not going far away from its middle territory, from the 50th. So momentum is not very, very good, right? Momentum is not very good. It's incredibly difficult to say in such circumstances what will happen here, but I would rather advocate for a decline here in this situation rather than the growth. Might be some consolidation here around 5,200 here. So as speaking of S&Ps, speaking of US 30, for example, might be the same situation with consolidation here at the bottom. So Bollinger Bands indicator, so if we refer to that, so the price is pretty close to the 2 standard deviations and had almost touched the upper band of the Bollinger, meaning that I don't think it will go substantially higher than this line given the situation of the sentiment. So, and also remember, sell in man, go away, right? Seasonal patterns. Seasonal tendency for stocks usually is pretty neutral for May. Well, not all the time. Sometimes there are good years. Sometimes market grows in summer like crazy. We've seen that in 2020, for example. But that was a typical year because it was COVID situation. It was interest rate moving down. But what we see here, probably it's peaking, so it's close to the peak. Let's see what will happen here with the publication of interest rate decision. Other than interest rate decision for the United States, what else do we have? We have, guess what, interest rate decision for Bank of England, right? It will be published the day after. So yeah, interest rate decision for BOE. So it's expected to move down for one step. So it's already priced in. So don't think that it's a good opportunity to sell GBP/USD. Nothing like that. But here it is, the expectations about the interest rate. So it's expected to move down in I guess in April, right? So why is that? Why May is not here? I don't know. All right. Whatever. So, but it's expected to move down. So let's dedicate a bit of our analysis to GBP/USD, for example. Well, for me, it looks pretty solid. So the rally is pretty solid, and I do like what I see here on this chart, because despite the consolidation, despite the lack of gains for the last maybe 2 weeks, I think it holds pretty well, and the rally is pretty strong. So, and other than that, so just we have this strong market structure. So how do I understand that this is strong? Well, first of all, you see that it's accumulating, it's going up in an upswing again, again the upswing, strong upswing. So, and 1, 2, 3, 4, 5th day of the consolidation is today. So that's a questionable situation already, right? It's questionable situation whether it will continue to go higher or not. So I think that we have control having changed here a little bit. So despite its strength, I think that control is changing. It's standing right at the short-term support reference, the 20-day moving average. Usually when the control changes, when the market is not ready to grow quickly, and it's just, you see, that was new peak, 1, 2, 3. It's 4, 5, 5th day, right? 5th day of the consolidation. Usually, if the market is ready to grow, it usually grows after 3 or 4 days of the correctional move. It should have grown yesterday or the day before yesterday. Day before yesterday was Sunday, obviously. Well, on Friday, I would say, right? So Friday or Monday, we should have seen some growth. Well, the growth is here, but not very strong. So now it's Tuesday, so it's growing, and the good question is whether growth will continue or not. So I'm very skeptical yet about this type of growth that we see here. But yeah, that's not a short opportunity either, I think, because it's pretty difficult to spot a short opportunity inside of the range. You need probably to undergo some pattern. So for market needs to establish some chart formation to break it falsely to the upside and maybe then to go down. So that's not just you go there and sell it. Well, that doesn't work that way. So you need to find some bullish trap or something that will point to a short trading opportunity. If that shows up and if some candlestick pattern appears, well, I would advocate probably for selling, but not until then. Until then, it's moving in the 3rd day, so who knows, maybe it will sustain the rally. We had a question, what's your sentiment on XAU/USD, which is gold? Well, guys, I've dedicated maybe 15 or 20 minutes to speaking about gold. Okay, let me sum up it a little bit later, okay, because probably maybe you missed the first type of the stream. I will sum up my take on gold a little bit later, just at the end of this session. All right, that's GBP/USD. So yen pairs, all right. Just to understand the dynamics of the yen, so let's go to the bond market, let's go to trading economics. That's the understanding of yields of 30-year bonds for Japan. So they're pretty high. And forecast is pointing to the decline a little bit, of course. But it's stabilizing, it's not going higher. So the interest rate for Japan is expected to go higher this year, but it's already priced in. The inflation for Japan is pretty stubborn, but I think it's peaking, so it might be peaking. Despite the yen perceived as a safe haven, I think that the era of safe havens is over. So you see that the gold is stagnating, and I think that the safe haven situation is no longer the driving narrative for the yen. You see that for example, USD JPY, it cannot break the support here, the horizontal support. It shows that market is not ready to drive lower. Again, the same situation is with Euro Yen. Euro Yen was actually above the peak. It was actually above the peak. So I think that we have some parity here. Euro is weakening, but yen also is weakening too. Euro is also weakening, right? And so I don't see any opportunity right now. So the opportunity was spotted when it was actually consolidating here. I was talking about that opportunity might work like that. So it might actually drive away from the so I mean it could break this triangle, break the range, after which it may go down. So that's exactly what I've told you on previous streams. By the way, guys, I have TradingView. If you like, you can find me on TradingView. Here is my profile, Stanislav Bernukhov Exness. All right. So sometimes I put my ideas and my suggestions here, and you can spot them here. We are not just talking trading, right? But we are just doing real trading too. So there is a number of ideas which we've been discussing throughout the streaming sessions. Some of them are playing nicely, some of them are failing, just like in every trading style, but I guess most of them are reaching price targets. And you can subscribe to my TradingView, so I will appreciate it too. So if you like, I know, so you don't have to, but if you like. All right, but what I'm talking about, so I was talking about this situation with Euro Yen some time ago. Here it is. You see, so I was referring to the market exiting this trading range. Maybe not immediately. That's exactly what happened. So I'm not sure it will continue going up, right? It is still possible, but I think that the upside pressure for Euro Yen is still lower. It's still lower already because it's a balancing situation. That was stronger when the euro was stronger, when there is substantial strength on the euro. Now we are not there already because probably the situation with the euro is done, at least temporarily. At least temporarily. I think we are at the end of the cycle. It's incredibly difficult to spot any long opportunity for the euro. Gold is king. We have comments. Gold is king. Guys, don't make the kings out of trading instruments. I know you like gold, but you know the old saying, don't marry your position. That has very, very good logic behind that. So trade where opportunity is. So go where opportunity is. Don't make anything your king, actually. I know you like gold, so that's cool market. I like also gold because of its volatility, because of its big swings, because of its opportunities that it provides. But sometimes it pays off to be flexible a little bit and move where opportunity pops up. I believe that opportunity right now, guess where? It's on the crude oil market, US oil. So it's bottoming. I know it's downtrend. I know it's scary. Yes, but we are below the $60 of this. $60 is a fair price according to the supply and demand situation. So we are entering this strong seasonal cycle of growth. The beginning of May, the first 10 days of May is the seasonal cycle of growth for crude oil. And well, the risk reward might not be that huge here, but I mean, if you have some entry point here, you might capture this swing. So at least I would plan to do so. So I don't know about you guys. I would plan to do so. By the way, I've put this idea on TradingView too. So I am not just talking about ideas, but also playing these ideas too. Here it is, by the way, you see. So that was the potential buying point here, 56. So 56 exactly. So it tested exactly 56. It's moving higher. Why am I thinking that we are going higher? First of all, First of all, the economic outlook is not yet bad, so it's not gloomy. So I think it was oversold due to increased market pressure. So we've seen that S&P 500 did what? So it retraced substantially. So it reevaluated the odds. So when Donald Trump had traced back with tariffs, so S&P 500 retraced substantially, but crude oil still stands at the bottom, still pressured by the increased supply, increased production. Saudi Arabia and OPEC plus countries, they increased production in May, so I know that, so all that we know. But $60 is considered as a fair price with this market. So speaking of the short-term to medium-term factors, there is not enough bearish factors driving it lower. I think that it had reached the bottom, reached the target, so it can move in the opposite direction. It might be a course of action for this week. That's why I've put it here in the list of trading opportunities. All right, so let's continue. So for GBP USD, by the way, so if you ask me what to do with GBP USD, I believe that it's still pretty strong, but I think we need some retracement or at least some retest of the lower area to continue moving higher. I don't think that will be a huge opportunity today. Maybe later when the price will come below the previous intermediate term low, which is this point. Maybe it will come below 131.90-ish. So I will be monitoring it here at this level, waiting for some candlestick patterns to appear. If it slides down and shows me the entry point, so that might be the potentially interesting entry point to the upside. Until then, I will be flat on GBP USD. I don't think that it's good idea to move quickly with GBP USD right now. I mean to move to the upside. As for example, pound yen. So yeah, the situation was actually also pretty strong. So you see, it's still moving in a strong uptrend, upswing. It's not trend, it's swing actually, because there is no trend here. It's sideways after all. That's an interesting situation that depends on the yen. The yen is still locked in a consolidation. There is no narrative here, but we are still in an upswing, and we are still slightly above the dynamic support area. Maybe it will need to retest the lower area. After that, it might retrace higher. So the same as with GBP USD, but I think that reaction for pound yen might be even sharper, because that's a faster market that moves in a faster way, in a faster pace. So totally you can think about spotting a pivot outside of this range, outside of this low, driving with the trend. So I think the trend is still on, so I think it's still going on, maybe not for long, and maybe it will just lock for a while, and maybe we'll just retest the Bollinger Bands again. So you see that it pushes down exactly when it touches the upper line of the Bollinger Bands, so we might expect something like that too this time. All right, so that's what I would expect from pound yen. What about American dollar versus Canadian? Let's take a quick look at the chart. It loses volatility. Well, obviously US dollar is under pressure right now, so we know that for the beginning of the week, right? For the beginning of the week it's under pressure. And under that circumstances, so it's incredibly difficult to say. It's consolidating in the very, very narrow consolidation, right? When that happens, you don't know where it should break, right? But actually volatility is diminishing, which might represent a decent opportunity in the upcoming days. So you see that, for example, if you place average true range indicator, which is ATR, let's put 20 parameter here. You see that it's close to the previous bottom, right? So volatility is bottoming. Not now exactly, but it will be bottoming in the near future. So when it will go to the bottom, that means that the market probably is ready for the breakout. We don't know in which direction, but we'll be ready for the breakout. So when it's bottoming, for example, just take a look at what's happening with the market. Market is ready for some swing. That's exactly what happens when the volatility is bottoming. So that happened exactly at the beginning of April 2025 or this year. Sometimes it just extends the consolidation but it was not the bottom of volatility, by the way, here. So that it was a local bottom, but the market was not going anywhere. So of course market cannot go anywhere, but we're talking probabilities. The probability of the market getting away quickly or getting out will be pretty substantial. I don't know in which direction, guys, so you quit asking me. I don't know in which direction. Nobody knows that. It may break it to the downside or to the upside. Just monitor it closely to which direction it moves, and don't try to fade or go against the move in this situation. It will be pretty dangerous. For example, it moves down, volatility is bottoming, so market is preparing for the move, and you start buying all of a sudden, for example. Well, sometimes there are bearish traps, for example. Yes, market can move in the opposite direction. Sometimes you can be stopped out in the situation if you play the momentum breakout. That might be, but you can place the opposite trade in the opposite direction after that if it starts to break to the opposite direction. All right, you got caught in a short, you can get long. So that's trading, right? So nobody is guaranteed against losses. So that's why I don't know in which direction it will break. That will depend on many factors, especially the speech of Jerome Powell, Fed's chief, and upcoming data. So, but I think that the movement on the USD CAD will be clear maybe in a couple of days, in a few days. So we are pretty close to the moment when the movement will start. But be patient, so it's not happening overnight, right? It's not happening today, maybe tomorrow, so maybe it's gonna happen, I don't know, on Thursday, on Friday. So we don't know that yet. But that's an interesting situation, that's an interesting pattern, right? Because we don't have so many patterns when volatility is bottoming, because now, for example, for gold, volatility is peaking. For Euro USD, I guess volatility is also peaking. Just let's give a quick look. Yeah, it's also has been peaking. Now it's diminishing. It has been peaking not so long ago. But for USD versus Canadian dollar, it's actually bottoming, which might represent opportunity in the upcoming days. Well, that's a good take. That's a good take. So we should take a note on this opportunity, which should take a note on this situation. What else, guys? So I guess that's it, pretty much it on my watch list today. So let's sum it up a little bit. So I expect for Euro USD and for gold, I expect the market to consolidate. I expect the seasonal cycles to be over, the volatility cycles to be over. American dollar is slightly under pressure ahead of tomorrow, which is the publication of interest rate decision as well as press conference. After that, it's not clear where it will go. I think it will not go it will not go lower substantially. So, meaning that the fundamental basis is more inclined towards the support of the American dollar rather than to decline. And sentiment is not supporting it. But if it, for example, Euro USD breaks to the upside, I will be very skeptical about that. Maybe I will treat it as a bullish trap. The same is with gold. If gold pushes to the upside, I will treat it as a bullish trap. I will not jump into the situation. I will treat it as a bullish trap, and maybe I will even try to build a short position if I have the decent entry point and a decent trade location. I'm not sure about that. Maybe I will not do that. But if I have the decent trade location, maybe I will pick a short position because I treat it as a bullish trap. On the next streaming session, let's see what will happen. That's interesting. That's actually fun. Well, I guess, guys, if you have any questions, we still have some time. We have chat here, so just put your questions here. And I guess from my side for today, that's pretty much it. So that was the market analysis session. I'm Stan. So come every Tuesday, the same time, same place, Exness channel. Put us a like, subscribe, whatever people do on YouTube, I don't know. So they subscribe, they put likes, and they invite their fellow traders, peers to watch the streaming session. So hopefully you get some value out of that, and I do my best to deliver a piece of knowledge for you. All right, so if we have no questions, so I guess We are ending the session. Thank you.